reserve requirement. As you all know this, Indian banking system is following fractional reserve system. I'll be writing a short form FRS for fractional reserve system. Under the fractional reserve system, if any consumer putting 1000 rupees in the bank, then the bank can't spend all the 1000 rupees to the other consumer or lend the entire 1000 rupees to the other consumer. It has to keep certain percentage or certain fraction of 1000 rupees as a reserve, and remaining fraction of 1000 rupees it can lend to the other consumer. This is known as fractional reserve system. So it is keeping reserve, we told. How much reserve it will keep means it is decided by the RBI based on the reserve ratio. There are two kinds of reserves the RBI, the bank should maintain. One is CRR, that is cash reserve ratio, and another one is SLR, that is statutory liquid ratio. Under CRR, the reserve out of, suppose for example 10% is a CRR, means out of this 1000, the bank should keep 100 rupees as a CRR. For example, 10% means 100 rupees it has to keep as CRR. And this 100 rupees should be kept only with the RBI. It should not have within itself. It should be keeping this 100 rupees with the RBI. That too, this 100 rupees should be only in the form of cash. It should not be in the form of securities or gold. It should be only in the form of gold, and this 100 rupees should be deposited with the RBI. Coming to the SLR, suppose if SLR is also 10%, out of the 1000, another 100 rupees, that is 10%, it should keep in the form of SLR. But unlike the CRR, the bank can keep the SLR either in the form of cash or in the form of gold or in the form of G security. As per the wish of the bank, it can keep in any form. And one more interesting thing is, bank no need to keep this 100 with the RBI, rather it can keep this 100 with itself in the form of cash, gold or G security. And this is the SLR. But generally what the banks do means, bank will prefer the gold G securities over the other two routes, that is cash or gold, because G security are nothing but it is a interest quoted, coupon rate quoted bonds. So if the bank is keeping 100 rupees in the form of government securities, let's say G security coupon rate or interest rate is 5% or 10%, means after the maturity, when the bank is submitting this G security, it will get additional 10 rupees as a profit. It kept only 100, but for that 100 it is going to get 10 rupees as a profit. So profit will be increasing. So the banks generally prefer to keep SLR reserves in the form of the G securities. And what is the current rate of the CRR and SLR means? Currently RBI fixed cash reserve ratio as 4.5%. Suppose for every 100 rupees, or suppose in this case 1000 rupees deposited, means out of this 1000 rupees, 4.5% should be kept as a cash reserve ratio in the form of cash within itself. And coming to the SLR, SLR is fixed as 18.5%, and this 18.5% can be kept in G security, gold or cash within itself. But generally bank prefer the government securities. So this is the reserve ratio or the reserve requirement of the bank.